Yeah, I'm losing my
Stock
edge.
bounces for bulls and bears. Let's get into it, Pete. The market bouncing pretty hard here today.
Yeah.
Second trading day of the new year. The first trading day, a lot of downside. The second trading day, just a massive stock market bounce. And Pete, before we get into how to trade this, because after this segment's over, no matter if you're a bull, bear, or neither, you're going to have no reason not to be trading stock bounces from here on out. Correct me if I'm wrong, but most people, I think, see the stock bounce, Pete, almost like a commercial. Like it's like I'm waiting for the next thing to happen, right? Like there's nothing to do in the stock bounce. Like you've been waiting for weeks for the stock market to sell off. It's been all-time high after all-time high. It sold off yesterday. Today's the bounce, and I think a lot of people just come to their platform. They say, oh, it's a stock market bounce. I'm going to go do whatever I was doing. To me, it's almost like a radio or a TV commercial where it's like, all right, I'm waiting for the next thing. But like, correct me if I'm wrong, I actually think the stock market bounce is the best time for action to get new trades on, right?
Absolutely. I couldn't agree with you more. And it's interesting. So we had the big sell-off, as you mentioned. Market bounced a little bit. Just as we came on here, the market started to turn a little bit, and we extended those gains. Pretty healthy amount. We almost recouped about half the losses we saw yesterday at the lows. You can't ask for more. And we talked about this week being an interesting week. More and more players are coming in. Not everybody's like you and I. We're not Pavlov's dogs. They ring the bell at 5 o'clock Sunday night where we're deeply engaged. But you're seeing you get this kind of frenetic back and forth. Some people call them head fakes, where we trade down like we did, and then it seems like the market's going to completely unravel, and then we come back. Last year we didn't have that head fake. We rallied the first day and continued to rally for the next 2 months. The previous year to that was the same thing. No head fake, no back and forth in these kind of relatively fast, truncated ways. I mean, today is a great day that if you were looking, and it reinforces two things. What we always say is you've never missed a move. Here's an opportunity where if you've wanted to put some short deltas on, it's giving you a nice bounce to do that. Vol is still in a little bit of an expanded state to go ahead and take a look at putting some of those trades on. You had the opportunity to buy lows this morning because we did trade lower earlier on in the day.
You're stepping on the whole segment. I've got you're covering everything in one shot here. We got it all for the bulls and the bears, the short term and the long term.
Show me the opportunity.
So welcome to 2021. This is where we're starting a year where stocks actually move lower. And in November and December of 2020, I'm obviously trying to be funny. It's not really hitting, I'm sure. But it's a low bar, I think, in terms of like financial person funny. But anyways, you'll remember November and December of last year, where it was quite literally like new high after new high after new high. Not seeing any of that back and forth that Pete's talking about. Well, guess what? January 4th, first trading day of 2021, stocks move lower and by a significant amount. I mean, this is a high to low here, 2% sell-off in the small stock 75. That's the market that we're primarily looking at here today. And what's nice about this, and this is not what you get with upside moves, is one, the size of the move. $1.50 in a small exchange product is a big move. Two, when they move to the downside like this, you tend to get these little bounces that are intraday. I mean, we're talking about today, a stock bounce that is from yesterday to today. That's interday. You got these little bounces and a ton of activity intraday as well. So now the question becomes, like you said, Pete, where is the opportunity? Because you look at the long-term chart and you're like, where's the sell-off? You know, like what actually happened? And I think this is what people get caught up in a lot of times. It's like everybody, all these different personalities that trade options and trade volatility and everything like that. You're almost like, what are they talking about when they're talking about waiting for a sell-off? You know, like what are they doing in that sell-off? Where is the opportunity in trading that sell-off? Because yesterday stocks sold off. Today they're bouncing. What am I supposed to do if I'm bullish or if I'm bearish, if I'm used to trading intraday, if I'm used to trading interday? And that's what I want to dissect, starting with the bulls that look at short-term trades. And Pete, you know, you are one of the pretty much poster children when it comes to neutral trader. Like you don't like to go out there and say like, I think gold is going to 5,000. I think the S&P 500 is going to 2,000. Like, you don't stake these big claims, but you've been leaning a little bit short the last couple of weeks. Even you were nibbling at some bullish long trades.
Yep.
And walk us through what that means to be like a short-term bull on a day like yesterday.
Well, so it's contra-trending your bias, and you're right, Frank. So it's a classic case, and we talk about this. It's good when it's put into practice of, I want to trade both sides of the market. And that doesn't mean that you're long and short at the same time, or I only read, that was a term of a guy I traded with who struggled, was so confused. I think you have a bias, and then you try to take advantage of maintaining that bias and then taking advantage, if you're going to be day trading or scalping static deltas, being able to take advantage of both sides of that. So, this gives you an opportunity after almost 3% in a day, as you said, and a little bit of settling, to trade a little bit of a bounce in these markets, and then look for, have I completely covered any shorts? Did I take off all my NASDAQ call spreads and calls? Did I take off my NASDAQ short deltas? Micros, I laid out some short micros. No, I didn't cover. I covered all the short futures because I flipped myself to long, but I still had short deltas for my NASDAQ calls. So what I was looking to do here is take advantage of a little bit of this. What we see is these back and forth opportunities on a short-term daily basis to take advantage of it. Now, here was a case where it worked, and you were able to cover some of your static deltas and put them out at better levels if you want to, or take advantage of a little bit of the market's natural back and forth. And that's what we're trying to do here. So it's a good, now the caveat to that, and here's a case where this kind of fit very well in this example. Market continues to roll lower. Well, I still have short deltas. I have a short bias. I wasn't too clever. I was looking on a short-term basis to take advantage of trading that range. You can't now, because you've added a little bit of short-term long. This is where mechanics come into play. And I got, you know what, we've really reinforced this. I got 2 great emails today about guys who are like, I scalped this for that and this for that. And you know what? I felt like I was so, and it was great because I had determined my levels ahead of time. I felt so good about this. One of them didn't work. 2 of them did. I ended up making $35. Now, scalping smalls, that's a nice day. Great way to do it. And the fact was, and the takeaway was that at some point, if I hadn't done that, I would have been underwater $200 on one of these trades. So it really speaks to this mechanics of setting these up and and that gives you the ability to, okay, I don't want to say I was too clever by trading both sides. I was looking for opportunity on both sides. Didn't change my long-term bias. I still have short-term deltas. It's the matter of how much I have.
And I'm glad that you bring up a couple of things. 2 main things is one, this is a different trade than that long-term, like you said, right. And going back to this chart, you had a short bias, just like a long-term short bias going into this big up move. A lot of people, I think, were on the same boat, selling calls or putting on short small futures or micro futures or what have you into that move. Now, yesterday hits, and it's a 2% move lower in the stock market. Nibbling at some small long positions here is a totally, to me, different trade as long as you have those mechanics. And right. I'm glad that you bring up that second piece, which is the mechanics around it, which makes sure that you're not short here going into the first trading day of the year. And now I'm trying to scalp, but I have no mechanics. And now I'm long, and it gets to that your old friend from the pits who was like, I don't know if I'm long or short. I'm long, short at the same time. As long as you have mechanics, and this is how you do it. It's so easy with the small exchange markets. This market, this first initial fall here, maybe you caught it at 62.40 or 62.60. Maybe you got it here at the lows right before this bounce. What you have to do going into it is say to yourself, okay, I'm looking to make $30, $40, $50, or $100 out of this trade. And that allows it to become, okay, if it bounces back like it did yesterday and going even a bigger bounce today, that's great. That's a great short-term scalp. If it goes through you, then you just get out for that, 30, 40, 50, or 100, whatever your marker is, loss, and then you're still short as the market continues lower. And that brings me to this next piece. If your long-term view is bullish, then I look at these sell-offs and these bounces as places to put on hedges into the bounces and take off those hedges into those sell-offs. And what I mean by that is, so I'm long, a bunch of shares of stocks. Maybe I've got a portfolio that over the last several years or decades has accumulated tens of thousands of dollars of long stock positions. A lot of people are putting on short small exchange products into this up move to hedge part of that portfolio, which is great. If you're a long-term bull, that's a great thing to use futures for. And then on a day like today, or day like yesterday, sorry, you take off some of those hedges into the down move. And then a day like today, the stock market bounce, I'm putting those hedges right back on. And so it's a matter of, if I'm a bull in the short term looking to make money off of the bounce, that's an idea. If I'm a bull in the long term, I'm taking off those hedges into the sell-offs and I'm putting those hedges right back on into the bounces, right?
Yeah, absolutely. And that's again, you're managing your exposure. You're creating a different set of tradable opportunities, and you're enhancing your number of occurrences. All good things. And I like the fact that Frankie, you're coming back, and we're, to an extent, a lot of our trades are contrarian trades. We're not momentum traders. Now, you can't argue that if you were a momentum do in 2020, on the long side in equities, it paid you. It paid you just a matter of degrees, depending on what you picked. For the most part, if you stayed away from oil and travel, you were gold. And if you went with the broader indices, you were definitely gold. But being contrarian traders, I like the fact you're bringing back in here that these products don't just fit for guys looking to trade extremes. They play a critical role in, when you're looking at a core long position, like you mentioned, of maintaining and enhancing returns on that position and managing the exposure on that position. I think that's a great point. I mean, we've been served up a great couple of days because we got a great 3% break. We got a 1.5% rally that's now softening up a little bit. You can't ask for more than that in terms of back and forth.
I'm so glad that you bring that up because, that's a short-term, long-term view for bulls. Those are two trades right there. And now I'm going to get into the same time window for bears. And what's great about futures and other derivatives, people love options. I think a lot of people get to the stock picking app and they get there and they say, all right, I'm going to buy this stock and I'm going to buy that stock. And it's kind of like I either win or I lose. When it comes to futures and other derivative spaces, it's a matter of hopefully everyone at the party winning. It's just different strategies, different time horizons. Look at the last 24 hours of trade. You could have been a bull, a bear, or a neutral, a premium seller, all those different things. And you could have won with all of those different strategies. That's what it's all about. And that's why I like to paint these stock bounces in all these different strategies. You could pick the one that you think fits your portfolio best. Now, bears can find success in selling into these small short-term bounces. Pete, I'm going to let you take this away because this is your bread and butter, is you get the 2% sell-off and then you get the 1 or 2% bounce into that. And that, a lot of people are kind of like I said, they're watching a commercial. They're ready for the next thing to come up. That's your trade, right?
Absolutely. It's the back and forth to a solid degree. This, and again, this sets up wonderfully for that core position, managing it, that your overall bias with some opportunity. And the opportunity isn't to pick the high and pick the low. You're not trying to do that here. I'm taking off all my shorts and I'm getting long and I'm looking for nobody is that clever. What you're doing is managing your bias and the amount of bias you're having in terms of, let's just call it deltas or dollars or whatever way you want to quantify that. And that's what you're doing. And that's where you take a certain set of performance or returns and enhance them. This is, we talk, going back to that exercise we did, talking about the 50-50 bet, mechanics around enhancement. And I know we kicked off the week with that. That resonates through everything we do. Whether or not we're employing strategies that are futures in and of themselves a binary decision. They either pay you or they don't. Now, if we're using this and using a number of those futures, we're then have the flexibility to monitor to maintain how much exposure do we want given a certain move. And you know what? If I'm short a 3-lot and I cover one of them or two of them down here, in my mind, that is taking advantage of the bounce because I'm looking to redeploy those shorts. Yeah. The first look at that would say, well, you're still short. Absolutely. But I'm not short my whole position. Sure. And I'm looking to take advantage of it. So contra trending bounces here doesn't mean I'm taking off everything that's short deltas and adding long deltas. It can be a much more nuanced expression of that. And whether you're hedging, doing that with premium, short premium in equities, as you mentioned, against long static deltas to manage that hedge, or vice versa, a long stock with short deltas in futures or futures options. Both of those work in this instance, and they're both ways to take advantage of it. So this type of bounce is the perfect type of bounce where you want to look. It's for me, it speaks to so many things. Both sides of trading this market and not feeling frustrated that, well, you know what, I've been short. Usually if you're stuck in shorts, you're short at worse levels than where we are right now. So now it's like, oh, do I add more? I should have covered. All those decisions are taken off the table because we've used our mechanics and our management at reasonable levels. Now we have the ability to go back in and add more of that position on if we choose to do so. I think this is a great opportunity. We talked about this yesterday. I started to sell NASDAQ call spreads and some naked calls. And that was I a little bit early on them? Yes, basis where we went this morning, but certainly at better levels that let me deploy that, and never thinking to myself, I missed the move. I mean, 3% down move yesterday. Would you love to have had more shorts? Who would? Do you always have the top? No. This is what we want. We want the back and forth. And I hate to say that these 2 days have set up wonderfully for this exercise of taking advantage of two sides of the market.
Yeah, absolutely. And Pete's speaking a little bit more towards like that longer term view where I was a bear going into 2021. And now with this sell off and bounce, the great opportunity is taking off some of those shorts and then laying them out again on a day like today. What I'm speaking more towards here in the short term, which is great, is a lot of people feel like, oh, I missed the sell off yesterday morning. But guess what? Yesterday and today, several different opportunities to sell into those bounces. I think a lot of people, and this is a frustrating thing where it's like you see the 2% or 3% sell off and you go, oh man, I missed it. And it's like, guess what? Most of the time in the next 24 hours of trading, you're going to get an opportunity to sell somewhere near where that market was before the sell-off. So I've always loved, and sometimes it's almost easier to sell into the short-term bounces than trying to catch the falling knife. But that's really up to you when it comes to that short-term view. What we at the end of the day, and it's not a matter of, like you said, Pete, getting too cute with it, which is like, I'm gonna be short going into the sell-off and then flip myself completely around. No, I think that you can not identify as a bull or a bear and merely just like be like, all right, the market's off 2%. I'm going to look at trying to get some long trades in there. Or, oh, the market has bounced back today, bounces back more than 2%. I'm going to look at some short trades and just trade the price action for what it is. So these stock bounces, they happen almost every single time we see a stock sell-off. Instead of just sitting on your hands and not waiting for the next sell-off, there's so much opportunity for bulls, bears, short-term, long-term traders, what have you.